founder and CEO of Somo Africa. She began working with herself, driven by a passion for creating opportunities for people to break barriers. She launched Somo Africa back in 2016, and over the past 8 years, she has grown Somo into a transformative organization, creating and impacting over 14,000 jobs in Kenya and Tanzania, with plans to expand to Uganda. Let's go straight into business. Fortunately, we are tight in time, so I'll ask the panelists to answer within 4 to 5 minutes, and then we'll see how much time we have for questions later on. I'll sit down, but the first question I'm going to do it sitting. Ian, I'll start with you. When it comes to equipping young businesses more effectively in order to attract financing or investors, how does your organization uniquely support young entrepreneurs, and what distinguishes you from other approaches in the ecosystem? Thank you.
I can see you're looking for a secret sauce, and I think it's probably more a combination of different spices that comes into that sauce. So I think one of the things is that we've been around for quite some time, so we have about 22 years of experience, and we kind of pivoted and evolved through time. So we were in small business lending, we've been in entrepreneur support. So all of that kind of gives us a journey that I think also equips us to know what that looks like in terms of how we best can support young businesses. And I think one of the lucky things of being around for a bit longer is that your network grows. And I think network and linkages, connections is one of the pieces that we need. Because a lot of the things is that we cannot do this alone. It's really about facilitating access to, which is also what's been highlighted already, that we don't try to be that Swiss Army knife that tries to do everything. But we really need to move forward, ideally, to a point where we get better at fewer things, rather than trying to do everything. And that also means that we need a much more collaborative effort. So that's, I think, another part of what we're trying to drive through different efforts is how can we, with a more collaborative effort, mobilize the resources that young businesses and entrepreneurs need. I'll actually try and keep it that short and then rather have more time at the end.
Thank you, Ian. Joblin, today we're witnessing later on a signature between the IYB and KCB. As KCB's foundation, what is your role in supporting young entrepreneurs when it comes to accessing finance, in particular if we were to address the early stage businesses? Thank you.
Thank you, Rodrigo. So within KCB Group, we run 2 very innovative programs focusing on young entrepreneurs and women entrepreneurs in terms of access to finance. And these 2 programs mainly look at supporting the de-risking of finance to the bank, but touching on business development services, providing networking opportunities within these businesses, and also, most importantly, is the aspect of enabling the businesses to access concessional funds within the bank. If I can give an example, through our Tujajiri program, young entrepreneurs can be able to access financing that is below the market interest rates by 5%. We have been lending for the last 3 years or 4 at 8% interest rate. That is quite low interest rate to support these businesses. And through that program, we have seen over 1.8 million euros, that is 250 Kenyan shilling, being disbursed in terms of supporting young entrepreneurs. But also, most importantly, we also have the female-led and made organizations or entrepreneurs proposition within the bank that has seen over 115 billion Kenyan shillings lent for the last 1 year. So we have innovative solutions that young entrepreneurs, that women entrepreneurs can be able to access financing through the bank, through the provision of the services I have already provided. So I'll keep at that, but we can be able to discuss more on those products.
Thank you. Amelia, since you're there. Well, finance is the topic. It remains a big challenge for companies to grow. By checking your newsletter and your website, I was quite, my attention was caught by the work that you do in terms of finding innovative ways to finance MSMEs, including, and I quote, enabling more transparent risk assessment for financing partners. Could you give us a few examples of the work that you do from both the research but also in terms of connecting the businesses with financiers?
Yeah. Well, morning, everyone, again. So first, just talking a little bit about the challenge we see. So, 50% of people in sub-Saharan Africa can't access formal financing. When you look at youth, that goes down to probably about 25% around that can access formal financing. So there's a huge gap that exists in being able to access the capital needed to start and grow a business. SOMO focuses on your micro to small type of business. We work in informal urban areas, we work in rural communities, and we support those businesses, as you said, with innovative financing models to help them get from a stage of being underbanked to being able to access more commercial forms of capital. So some examples of how we do that. We utilize data and social relationships to be able to provide that type of financing mechanism to entrepreneurs that don't have access in kind of more formal financial institutions. So if you look at what's available right now, you have your MFIs, you have your microfinance, and digital lending, and most of that is very small check sizes, very quick repayment timelines, extremely high interest rates, and it's very hard to start a business with that. You then have your SME investors that are looking for a little bit larger ticket sizes, a little bit's an understatement, much larger ticket sizes than what a lot of businesses that are starting off actually need or are able to take on. And then you have banks that require collateral, they require credit history that our entrepreneurs just don't have. So what we do at SOMO is we have developed tools that allow us to collect real-time data on businesses. So tools that work on your basic technology, so USSD, WhatsApp, allow us to collect financial data that we validate using the different mobile money, or if they do have bank account statements that our entrepreneurs have. And we pull that data along with social relationship data. So through our community of entrepreneurs, which is now over 10,000 entrepreneurs we work with in East Africa, we're able to pull data on the different relationships they have in that community that allow us to now provide non-commercial capital with the goal that they're going to be able to graduate to a stage that they can access that more commercial forms of capital over time.
Thank you. Doctor, you are sector leader at SNV being one of the implementers of a EU IYBA project, namely the IYBA Seed, which was also launched at the same time as the IYBA last year. In order to update our audience since we launched the project, would you run us through some of the activities that the IYBA Seed has been doing with not only young people but young enterprises when it comes to financial and technical support in order to make them more investment ready? Thank you.
Thank you very much. Let me first introduce SNV. SNV is a Dutch organization based in the Netherlands, Hague, and we have been around for the past 37 years in Kenya. And under the IYBA, a project which is funded by the European Union under the auspices of the European Partnership, we implement together with other 5 partners. We have the Slovak Aid, we have the GIZ, we have SNV itself, we have Annabelle in the Netherlands, and then Expertise France. So those 5 organizations work in tandem. The project is also implemented in other 5 countries. We have South Africa, Benin, Burkina Faso, and Kenya. And what we have done so far is develop business development services, which are around financial and also non-financial services. So we work with local organizations who have been able to map out financial institutions which can be linked to the young businesses. And young businesses here, we mention about businesses which are driven by youth below 35 years, but also among women of any age. The second one is on, we are looking at the business environment, and we are looking at the rules and regulations which impedes the youth from doing their businesses. So we have done an analysis of policies which are affecting the youth businesses so that we can be able to unlock them. And apart from that, we are also developing curriculums for training these businesses, the young businesses, on how to engage with the government in terms of policy and advocacy engagement. Third, we also have the interventions around women. You know, there are norms and rules at traditional levels, at national levels, which affect women from participating in gainful employment opportunities along the businesses opportunities we have. So we have also done some studies around that to identify what are those norms which are affecting women participation, and also what are those traditional norms which we can unlock so that we can release women to participate in businesses. Like, for example, you know, household activities can be an impediment to women participation in gainful employment. So what can we do through gender transformative actions at household level to unlock those opportunities for women? Also, for example, when you bring women to train in a particular area, how can you provide an environment for women with children so that they can be able to access those trainings? So those are the things which we implement. And then also, we are also looking at the actors within the ecosystem so that we can be able to link them to the young businesses so that they can be able to benefit from the ecosystem. So we have an organization called ASEC. ASEC will be able to map for us who are these people within the ecosystem and what are their roles within the ecosystem and how can we link them to the young businesses we be promoting the next 3 years. Thank you.
Thank you, Doctor. Well, first of all, you've been also very good in keeping your answers short, but I'm going to take advantage of it a second. I'm going to allow you to expand. I'm going to make a connection with what you talked about, the support specifically to women entrepreneurs. And this is a question for Jobling. It's my understanding that as the foundation, you're doing some interesting research, work on identifying gaps in financial inclusion for women-led and youth-led enterprises and debunking some of these perceived risks. I wanted to ask you, is from your work, are there already some initial findings that you can share with us here when it comes to specific, maybe even financial products or financial interventions or technical that would be best suited for these underserved or entrepreneurs, being youth and women, without revealing too many secrets, but can you share something with us?
Definitely. Sure. So KCB Bank and KCB Foundation in 2023 launched the FLAME proposition, that is a program that was focusing on enabling access to female-led and made enterprises. And one of the key issues that we were looking into is the perceived risk among women entrepreneurs in terms of lending or in terms of access to finance. So we set aside 250 billion Kenyan shillings as a bank to just see what we can learn out of that portfolio in terms of the women who access financing. And some of the key highlights of what we have been able to get, it was focusing on the main barriers like lack of collateral in terms of as a barrier that actually locks women from accessing to finance. Another area was on the lack of capacity, that is business management capacity. This is more of also a perceived risk within the credit lending mechanisms. And we were able to see some progress within the last 18 months that actually when we tweaked the lending matrices, normally at the banking level we call it the scoring matrices, women actually who have been able to access these funds are doing very well. And even in terms of the non-performing portfolio, they are below what they expected. Some of them, actually, the portfolio is performing very well. It's below 5%. So it's actually a perceived risk that young entrepreneurs, women entrepreneurs are riskier. What our data is giving us is that they are very good payers of loans. They pay loans very well. And we further went into tweaking that scoring matrix in terms of now focusing mainly on their credit history. Women have very good credit histories, which we use now to support their lending. So we focus also on cash flow lending, so where we look at their cash flows, we look at their repayment histories. Also, we also look at their network in terms of support with regards to businesses. Do they have mentors? Do they have coaches? And we are able to actually support the lending. So we are happy that we have this product, we have this financial solution for women entrepreneurs. And as I mentioned earlier, that we have been able to lend 115 billion, that is 1 billion euros for the last 18 months. And we had only a target of 50 billion because we were shy at that point that they might not be able actually to access. But once we tweaked and we looked at that matrices of scoring and we were able to tweak it, we are impressed about what we are seeing. We are also happy in terms of how the portfolio is performing. And I can say that women entrepreneurs is the way to go. They are creditworthy. They can be able to be supported to grow. And we hope that as we enter into this partnership with the European Investment Bank, we can be able to support more women to be able to access this financing. So just insights, that is a perceived risk. Data is showing us that our non-performing loans for women entrepreneurs is quite low compared to the other portfolios.
Thank you, Joblin. Women entrepreneur is the way to go. Put that down, write it down. This is what you need to take out of this panel. Thank you, Joblin. Ian, and for the next question, I really want you to take a little bit more time. This is based on a very interesting conversation we had not so long ago. We were discussing and you referred to financiability, bankability, and investability as distinctive stages. And then for me to understand the meaning, we were discussing about the role of the different stakeholders. So hence my question, which we started discussing, but I would like then to extend to the audience in terms of how can we foster more collaboration between the stakeholders in these three distinctive stage of the entrepreneurship or starting from early stage in order to unlock more financing beyond the current resources. Please do really take your time, because I think it's a really interesting debate.
Yeah, I think we have the sense that we use the term access to finance, and then that's one thing we paint everything with. And I think this was a way to kind of frame a little bit that we need and have different stakeholders that play different roles at different stages in the growth of these businesses. And I think also we need to perhaps get a little bit out of this idea that banks are going to solve all of it. That's also not how it's happening in the West. It's not going to be the way it's happening here. They have a role to play. And then we need to perhaps also make sure, and I think that's also two of the elements I'm getting from the other speakers, is one thing is access, another thing is then the ability to access what is available. The fact that things are available does not necessarily mean that it is accessed. So also that there's different things that are fit for purpose, and we then can find out, as you rightfully say, how do we then collaborate? How do we build that collaboration between banks, later stage financing, investors, and also perhaps de-emphasize this hyper-focus that I think we've been created around that success for entrepreneurs is how much money they raise, rather than what's the growth they're going through, and that the growth can be easily achieved, or it can be achieved with other stakeholders as well, not just investors investing equity. So there's a lot of heroes, I think, that we are missing out on in this part. I think, so going by, and perhaps an example that we had, that I think was shared as well, was that we, for 4 years, worked in Malawi with UNDP, and they had a program that, which I think is typical for funders or donors, that they provided a grant vehicle to entrepreneurs going through an acceleration program. There's a very generous $10,000 to $40,000 that's being provided. And it was communicated, as so often is the case, as free money. So we have a communication challenge where we often communicate things for free, which means we're not preparing entrepreneurs for a life where there's going to be commercial money. So what we managed through a conversation to kind of tweak was to say, we call it co-financing. So can we already start building in a communication that speaks to financing and a sense of there will be commercial aspects and players coming in, but we can build in something that is very concessional and very favorable in the beginning. And we then managed over time, over 4 years, to then involve co-financing as being the entrepreneurs with our support had to raise matching financing from other institutions. And there was banks that came on board. There was a very indigenous bank that was very conservative and with very high interest rates as usual. But they're willing enough to go and dip their toes into this. There was something here that we're interested in. And I think one of the things that we learned over time is that we need a long-term perspective. There's too many of these elements that takes very short-term perspective. And given that we have significant trust issues, then there won't be enough time to build that trust that, for example, banks, to get a sense that this is not as risky as perhaps is rightfully shared, perceived. And also, how do we, as I think is also highlighted, I think the word data and insights is something that we really need to build out. So what is that evidence that we can come and show that these perceptions, narratives, are not entirely true, or sometimes they're absolutely wrong, or they are right sometimes as well. And we saw that the banks, over the period of 4 years, became the favorite also by the entrepreneurs part they would have for their co-financing, which is a bit against what we initially had anticipated. So I think that there is a sense that if we're with the right approach and also have a way where we acknowledge that this is going to be a relationship. I know that we always, and we think that banks, for example, are all transactions because that's the status we get at the end of a month is a transaction sheet. So it almost narratively is what we are kind of learning. Whereas we then have the perception, and once we get to talk to equity investors, then there's a relationship. And maybe we need to look at that. And we also know that banks have relation managers, they're not transaction managers. Well, I'm sure maybe they have that as well. But we need to look a lot more around how do we address these fundamentals around trust, which we know is almost a currency on its own. So let's start looking at it as a currency. And it kind of is, I think, some of the things that Emilia is working on, is in principle is that bit. How do we take trust relations and turn it into a currency, something that we can use to then score and assess whether an entrepreneur is eligible, ready for, could apply for this kind of funding. I think then building a little bit on, and we need to have more of a pipeline approach. So different players play a different role, and how do we then start connecting what is very disjointed right now? And it's almost to the point where you think, as is a Team Europe, there should be a Team Finance, which is literally bringing together the different actors to say who's playing where, how could we create a joint effort that actually speaks to a pipeline, rather than we have pieces and buckets that doesn't really amount or get together to be a pipeline that is collaborating, which also would in itself create a de-risk. It would in itself create a flow potentially of data and some of the trust and the elements that we're talking about.
Thank you. I think we need to start working on this team finance. I'm hearing a lot of keywords already, I think, for the next event that we would like to organize. Dr. Ojwan, I want to acknowledge your sector expertise. And I want to point out the work that you specifically do. I know that in terms of sectors, you work on water, energy, and agriculture. So when it comes to agriculture and agri-food, it's considered one of Kenya's economic pillars. I wanted to ask you, how can entrepreneurship and innovation at large, how can it support Kenya's primary sector and improve its global competitiveness? So how do you bring then this IYBA Seed, for example, specifically on agriculture?
Thank you very much. In the IYBA project which we are implementing, we are cognizant that there's need for us to identify innovations along either the value chains or the systems which the youths can plug in. One of the opportunities on the value addition, by stimulating the youth to start thinking along the value chain, what can they do to improve on the value of the products? For example, if you go to the western part of Kenya, where they are producing vegetables, and also in the eastern Kenya where they're also producing the same vegetables, what opportunities exist on the value addition, especially on improving on the shelf life so that they can be able to access better prices during the off-season, and also do value addition for specific markets. So that intervention will be able to make them more competitive. The second one is on the technology adoption. There was a study which was done by Heifer International and AYUTE, and one of the challenge which was affecting the youth is on the access to technology. Technology like the tractor hire services, for example, soil testing services, for example, and then also we have now the AI, artificial intelligence. How can these technologies be able to enable youth to gain income from them, for example? So we are exposing these youths to these technologies through mentorship and also capacity development. The other one is on the sustainable production practices, but at the same time looking at the environment for the future, and these sustainable production initiatives like regenerative agriculture, for example, where we have youth investing in biofertilizer production, or the organic fertilizer production. We have some in Nanyuki, the EcoFix. We have Synergy in Nairobi here, who are also establishing some processing units in Kakamega. So how can the youth participate in such opportunities? And also we have the drone services. How can they use those services to be able to collect data so that they can be able to inform on their interventions? The other one is on the market and skills. At SNV, we don't just say training. we say demand-driven, market-relevant training skills. So we don't just train, we look at the opportunities within the market, we look at the gap which the youths have, and then develop their capacity in orientation to the market. So that also makes them become more competitive. And then lastly is on the linkage to the market. In my 23 years of experience in the agriculture sector, there are two things which come up. One is that if you provide market to any entrepreneur, any farmer, in any location, then you will have stimulated all the activities along the value chain. This person will be able to motivated to adopt climate smart technologies. This person will be motivated to invest in the transport system. This person will be motivated to invest in the cold chain so that they can be able to reach the market. So how are we stimulating the market for the youth so that it can be competitive? Is through data. Provide them with the information and also link them to sustainable markets through which they can be able to market their products. Thank you.
Thank you, Dr. Ashwan. Now the key word, technology. Amelia, I'm probably leaving the most difficult question to you. In your views, what would you say are the key institutional challenges in the entrepreneurial and innovation ecosystem? And what are the urgent actions that us as stakeholders, you on the ground and us as development partners or development financial institutions, should we engage in order to address those challenges? Thank you.
Thanks. So I was touching on this a little bit earlier, of just the type of financing that's available for your micro or small business is just not accessible for most businesses in the end. And so figuring out different players that can provide different forms of capital at different stages, as Ian was mentioning, is important. So how do we kind of start to build that pipeline of an entrepreneur at a very early stage, at a very informal stage? How do we work with them to get formalized and start to access small amounts of capital to build that business? And then what are the stages after that? There's a huge gap that exists between, you know, your like microfinance digital lending type of option and then like check sizes that are $100,000 plus. And so that needs to be closed, and we need to figure out different players that can provide that, both in a commercial way as they start to grow, but also at an earlier stage in a more non-commercial way. So like what KCB Foundation is doing with trying to provide non-commercial forms of capital to start to graduate those businesses. So just a little bit more on like our experience as SOMO, we provide our entrepreneurs with financing directly. And we do this through aggregating all the data we're pulling in from them. So we're pulling in financial data, impact data, social data, any existing credit history with SOMO of any previous financing they've accessed. And we're aggregating all that data in an alternative credit scoring system. And so we use that, that is all real-time data we're collecting from the businesses. It's automated, and it allows us to determine which businesses we're going to invest in and continue to invest in, and then which businesses we're also going to start to graduate off to other forms of financing and other institutions. So we work with impact funds, we work with banks to be able to provide this forms of capital and then start to graduate those businesses. And so I think when it comes to stakeholders, it's figuring out what is that pipeline, who's working in the different spaces, and how do we really start to build that more effectively and have those conversations and not all be working in our own little spheres and really be able to support these businesses from one stage to the next and figure out which businesses need that next stage. So, you know, some businesses are going to be sustainable and they don't need more and more capital to continue growing. They might be more of, you know, your family business that's going to pass on to generations, but it's not going to grow around the region or start exporting products. That's okay. Those are still sustainable businesses and I think finding value in those as well is important. We don't need every business to be a unicorn. We need to invest in a few more zebras as well that can, you know, invest back in our environments, ensure that they are sustainable, create meaningful jobs in their communities, but not every single one needs to be a billion-dollar business. And so I think that also has been something that we've seen over the last 18 to 24 months too in this ecosystem of sometimes we've invested in those businesses and that's where all the hype is, and you know, they're exciting, they're talking about these big numbers, they're gonna reach 1 million people tomorrow, and in reality some of those don't have real business models. So it's figuring out like what are those different models that are actually working to support businesses at different stages, and accepting that not every business needs to be that huge business. And so building out that pipeline more, I think, is important. Just talking about a little bit on the, like, you know, with the businesses actually being good repairs, the youth, the women being good repairs, our experience at SOMO is actually that we see women better repairs overall than men. And youth, actually, this is more surprising to us, youth are better repairs than older entrepreneurs as well. So that's something that we've seen. Overall, with our portfolios, we provide a few different forms of capital, but with our debt portfolios, we have less than 3% of our loans are late, and less than 1% of them are defaulted. So just showing like we can provide forms of capital to entrepreneurs that don't have extremely built out credit histories, don't have collateral, and that actually come back with returns. So hoping we can build more of that as an ecosystem.
Thank you. I've been told that the open questions will be left for after the second panel has taken place. So since we still have a little bit of time, I had another question that actually it's for all of you and giving you a minute or two to answer. And perhaps it's related to what Amelia, you were saying, you know, unicorns and zebras. As players on the ground, you work with different startup cohorts. I wanted to ask you about should we focus on high growth sectors or high growth companies, or should we have a more diversified strategy with mixed cohorts of startups at different stages of growth, from early all the way up to scale up, in order also to perhaps a way of learning from each other when these startups meet with other startups at different stages? Ian, you want to start?
Yeah, absolutely. We need to build high growth businesses because the data will show that those are the ones that will create the jobs that we're asking for. We also need to build pipelines so that we have the future high growth as well. But perhaps we need to be clearer around, at least in my opinion, that we can't just train every young person in entrepreneurship and then assume that this is the solution that we're looking for. So that means also that a lot of young people will start their businesses and they will fail, the same way that it's been happening everywhere else. We need to help them be better equipped, fail better. And I'm going to say fail better because I think also what we're going to see is that most of them, if they have the seed of entrepreneurship in them, they will come back. And then we need to perhaps not count businesses as they succeed on the first time or the second time, but more look at a journey of an entrepreneur, especially a young person, because they may not, the asset as a young person, not necessarily or always the business that they're forming. Once we start perhaps having a different perspective to that, we'll see a different picture. But it also means we need to look at this as a 10-year horizon where young people will go through the experiences that is being offered and will learn, will join a team, will potentially go back into employment to recover, save money, go out and go back again. That's what entrepreneurs do. And also acknowledging that not everybody is entrepreneurs. And there will be people who may be great co-founders, but they're not the ones who drive the innovation or the business. But they are a fuel that we need for those businesses to happen. And I think it's absolutely right. We're not going to build 1 million jobs on hype. And any statistics we looked at in terms of unicorns, they're great at creating financial value, but if we look at the actual number of jobs they're creating, they're not the ones that we need. And I think the beautiful bit is that our landscape and our savanna isn't one with unicorns. It has zebras, it has giraffes, it has rhinos that are able to pull through and does really good jobs and creates value, and those are the ones we need to create more of. We do our thing, and then we let others who likes unicorns do unicorns. But I think we need to look at what's our environment, what is sustainable, and what's creating value for us. And that's what I think we need to focus on. But yes, if you ask for focus, then I say yes, high growth. But I think we need, every different stakeholder need to kind of play their role in that pipeline building. So just to a little bit back to that aspect.
Yeah, my take will be that we have to have a blend, you know, of both, where we're focusing on those who have the greatest potential, high growth, but also the emerging businesses is also an area of interest. What I would say is that we do not need to focus on only the high growth potential sectors. We need to focus on all the sectors. And in entrepreneurship, growth is channeled by a ripple effect. What do I mean by that? A potential or a growth in agribusiness leads to growth of other sectors, logistics, for example, transport, for example. So we should be able to focus on businesses that have potential, finance businesses that have potential, but across the sectors. Because if you only focus on one sector, then that sector, you limit its turnover or limit its growth potential due to underserving of the other sectors, which might be servicing sectors for this growth sector that we are looking at. So my take will be focus on high growth potential businesses, but across all the sectors, such that we continue maintaining the ripple effect across all the sectors. Thank you.
So building on what both Ian and Joblin have said, I think having a certain percentage of high growth businesses is important, and building the pipeline to allow for that is important. I don't think that all of them need to be high growth businesses, as I somewhat mentioned earlier. I think sometimes that definition of even what we're calling a high growth business is important. You know, we have 1 million fintech companies now in Kenya alone, East Africa, a ton. Most of them are moving around money that doesn't even exist because there's no real business that someone's running or job that they have behind that. And so some of that high growth, yes, you can reach a ton of people, but what value are you providing that person? Do they have a job? Do they have a business that they're running? Are they making any money to actually be able to move through that tool, for instance? No insult to anyone who runs a fintech company here. I'm sure it's doing great. But I think it's really like, what is that high growth? What do we define that as? Are these businesses actually creating meaningful jobs at that growth level? Are they creating a real business that can scale, that can start to export? Are they building industry that we still have definitely need to invest more in this region? I think those are all big questions that we need to ask before just saying, oh, this business can reach 1 million people. That is less important, in my opinion, than how they are reaching that 1 million people. What is the actual impact they are having on the individuals they are employing or reaching with their products and services? So I think that definition is really important. What I would say is we need to build more of a pipeline of sustainable businesses, of businesses creating meaningful jobs first, and then continue to be able to invest in those that we see now that's potential for that high growth. So figure out models, like I'm gonna plug in SOMO again, what we do. So figure out models that allow us to be able to start to graduate businesses from one stage to the next, utilizing data and understanding, okay, this business is starting to plateau, they're still sustainable, but we don't need to invest more and more in them to help them grow to the next stage, versus a business that we do think has the potential to really create those meaningful jobs, create impact through the products and services that they're selling at scale. So I think that is building that model, and that pipeline is really important for that.
Yeah, at SNV we are taking a holistic approach. We are not specific to any cohort, because we believe that each cohort has a comparative advantage. The comparative advantage is in, for example, providing mentorship programs for the startups, especially for the high high-end companies. For example, in Kakuma, where we have an energy project there, we have one company there which is training youths in terms of production of energy-saving stoves. After that, they graduate into create their own businesses. But we expect that the companies still provide mentorship program to these young refugees in Kakuma. So we believe in that. And then also we look at in terms of scaling up of the opportunities for each of the cohorts. Some of those private sector provide financial models for the startups in terms of, for example, creating a franchise. Yeah, that's the word I was looking for. Creating a franchise program for the people who have graduated from their system. That, we believe, is creating job opportunities for the youth, while at the same time working in a holistic way so that you incorporate all the players in the sector.
Thank you all. I unfortunately need to conclude this panel. I came a month and a half ago to Kenya, so this for me has been very eye-opening. I hope you can drag your own conclusion. I have my own conclusion. I hear from the last question, invest in the journey, not just the entrepreneurs. Look into crossing sectors rather than just high companies in one specific sector. Sustainable and impactful companies. That's what we need to do with an holistic approach, having all stakeholders involved from the beginning. Ladies and gentlemen, can I ask you a round of applause to our panel, Ian Lorenzen, CEO of Growth Africa, Amelia Hopkins-Phillips, CEO of Somo Africa, David Ojwan, sector leader at SNV, and Joblin Omari, head of program at KCB Foundation. Thank you very much. I've really enjoyed this panel. I hope you have. Everyone, the next panel, Joy, I leave it to you. Thank you very much.
Thank you. A loud round of applause for them as they leave the stage. Thank you so much. If you have any burning questions, please keep them until the next panel session, because we are running a bit late, so we'll reserve a few minutes at the end for that. At this stage, I would like to recognize the presence of Dr. Paula Basinga, who is the Director for Africa of the Gates Foundation. The Gates Foundation is one of the key partners or the financiers of this initiative that we are here for today. So thank you very much for taking your time to be with us here today. Yes, so we have heard about how to build a pipeline for invest in young businesses in Africa. And we've heard about all the challenges of what startups go through. And I would like you to maybe give me an estimate, what you think. What percentage of startups do you think fail in the long run? Please, by a show of hand, how many of you think is 30%? None? 60%? Any other 60%? 90%? Wow. You know the statistics. So believe it or not, in the end, a lot of startups, 90% of them fail. In the first year alone, a failure is at 20%. So this is according to the statistics from the Founders Factory Africa. But there's hope. So that's why now I want us to set the stage or the scene for the next panel discussion. This panel is about catalyzing capital into the IYBA companies so that we prevent this valley of death, this failure of companies. And for that, I want to invite the second panelists to the stage. This panel will be moderated by my very lovely colleague, Faith Njoroge, who is an investment officer at the European Investment Bank. Welcome.
Thank you, Joyce. Good morning. I think it's still morning. Good morning, everyone. And thank you to Panel 1 for your contributions. We have all heard very clearly about the challenges and the opportunities that come with building a pipeline of viable projects. It is now time for us to hear from another stakeholder, a key one indeed, who is also an enabler of this entrepreneurship ecosystem, and these are the financiers. So allow me to welcome on stage with great pleasure, in no particular order, Nishdeep, Collins, Faith, and Benson. Karibuni sana. And as they come on stage, as they settle on stage, this panel will be trying to help us understand the role of financial institutions in supporting youth and women-led businesses and early startups in Africa. We need to answer questions like, why do banks shy away from startups? What can MDBs do to encourage bank funding to these businesses? How can these businesses position themselves to tap into the needed financings? And what are the lessons learned along the way? All this is in line with the IYBA initiative objective to help young businesses and entrepreneurs in Africa, and especially women, to launch, to consolidate, to grow strong, inclusive businesses and create decent jobs. And this is a topic that resonates very well with the European Investment Bank's development mandate. So, karibuni to our panelists. Maybe a round of applause for them, just to encourage them. They need a bit of encouragement. All right, let me ask, I'll start from the very end. Just quickly take a minute or two to introduce yourself and introduce your organization.
Thank you. It's my pleasure to be here today. So, as Faith has said, my name is Nishdeep. I'm the Group Director for Structured Finance at the African Guarantee Fund. And we're a guarantee fund that supports small and medium enterprises and access to finance through providing guarantees and de-risking the SME portfolios with financial institutions across Africa. So we are in over 44 countries, and we have guarantees and partnerships with over 250 financial institutions across Africa. And we've supported close to 40,000 SMEs so far. And about 40% are, even close to 50% now, are youth-led and owned. And about 30% are women-owned and led. So I think I'll stop there.
Good morning. My name is Faith Kathambi. I work for FMO within the Financial Institutions Debt Team. FMO is the Dutch Development Bank that is based in Netherlands. And outside of Netherlands, we have 3 local offices, 2 in Africa, one in Nairobi where I sit, and one in Joburg. And FMO was established in 1970 with a mandate to create additional investments within low and middle income countries with a view of attracting private capital. So it's majorly owned by the Dutch government, and it's licensed by the Central Bank of Netherlands, and also good to say that we are AAA rated. So our work focuses around 3 sectors, 3 key sectors. We invest directly into renewable energy projects, into agribusiness, food and water projects, and we also invest in these sectors through our investments to financial institutions, which for us is banks, microfinances, and fintechs. Our total committed investments to date is about 13.5 billion euros, and about 35% of this is in Africa. So our key strategy is to invest more in Africa, in low-income countries, middle-income countries, and fragile states. And we invest, as I said, through debt, equity, and we also offer technical assistance to our investees just to help them improve their businesses.
Good morning. My name is Benson Kitabu. I'm the Managing Director of Kenya Women Microfinance Bank, popularly known as KWFT. Kenya Women was formed way back 40 years ago, that's 4 decades ago, and its main objective or mission is to economically empower women because previously, by the time it was being formed, women didn't have access to finance, and therefore the main objective of the institution is to ensure that women are included in the economy of this country. So we are in across Kenya, we are in 45 counties out of the 47 counties of this country, and we have a network of about 190 branches across the country, and we have employees of about 1,400, and we serve over 1 million customers. And we do provide credit facilities in terms of working capital, and also for improving livelihoods. And also we do empower women to make sure that they are able to save and improve their livelihoods. Yeah.
Good morning. My name is Collins Wanyonyi, Director for SME Banking at Equity Bank Kenya Limited. And Equity is part of the Equity Group of companies, and within the Equity Group, we have 3 levels of business. We have one side, which is the technology side, which is anchored under FinServe, and we provide both MNO and banking technology. The second side of the business is the banking side, and the bank has operations in 6 countries: Kenya, Uganda, Tanzania, Rwanda, and DRC, and South Sudan. And the third side of the business is the insurance. So we have health and general insurance that covers that business. The group is anchored on our strategy, which is on the Africa Resilience and Recovery Plan that looks at providing solutions by the year 2030 to 25 million, create 25 million employment opportunities and support 5 million businesses. So we exist in transforming lives, giving dignity, and expanding opportunities for wealth for the African populace. Thank you.
Thank you very much. Now, we've heard that you all play in very distinct sectors, very distinct roles in this ecosystem. 2 multilateral development banks, 2 commercial banks. So we would like to understand, what role do your specific organizations play in catalyzing this capital? And maybe go a step further and tell us what specific interventions you have in place in this regard. We can start with you, Collins.
Thanks, Faith. So if I'll go back to our local solutions within the Equity Bank Kenyan Equity Group. So we pride ourselves to be a 3-engine business. And when we talk about 3-engine business, we have the banking and financial institution side, we have the Equity Group Foundation, and then we have the sustainability engagement from the business. Now, from the Equity Group Foundation side is where we've given solutions that solve for the young business. And when I look at young business, we cluster them into 2. One is young, between the age of 18 to 35, at that age, and young being businesses that have just started. So you could have been a 50-year-old, but you're just starting the business today. The solutions that we provide to them are anchored into 3 levels. So the first one is training and capacity building. So we've provided financial inclusion training to about 60,000 youth, and all these youth have been anchored on solutions for what they can be able to build their business. The second piece is we've worked with a number of partners, and we've given seed capital to a number of youth-led SMEs to just be able to start their business and see how they can progress based on the training and capacity building that we'll have done with them. And our training and capacity building is a 16-module training where we walk them through. And then the last piece into this is just provide them financing. And I think the example I'll put here is their Equity Afia model. Right now, we've got about slightly over 115 Equity Afia clinics. And the model of Equity Afia clinics is these, and most of us are conversant with the Wings to Fly initiative by Equity Bank. So the medical students that were sponsored by Equity Group Foundation have been financed to start up the Equity Afia clinics. and that is purely seed capital. These guys have not run any medical facility, they have no business acumen, but then the bank financed them to start those businesses. So that is how we plug into supporting the youth in engaging in business. Thank you.
Benson.
Yeah, I think for KWFT, I would say we are in all sectors of this economy, and we started by looking at how do we include women into the economic development of this country. So if you go to any market, you'll notice that 90% of the participants are actually women. So we started by making sure that we are able to provide them with working capital. And as we moved along, we noticed also that sometimes you find the business don't grow, and then the question was why? And we realized that actually they go beyond just doing business, then they needed to improve their livelihoods, and therefore we came up, now we did needs assessment, and we realized that there's more beyond business, and therefore we came up with products which would be able to improve their livelihoods. So you will find that we provide water and sanitation solutions to our women clientele and their families. We also provide green energy products to our clients. And further, if you go to the rural areas, you'll notice that first is that the women clients don't have security per se. So you'll find that they stay in a homestead where the old man is the one who is holding the title, but they've been allocated places where they are supposed to build and come up with a home. So we came up through partnership with UN Habitat and came up with a housing solution, which we call housing improvement solution, whereby they are able to incrementally build their homes and live in an improved household, and with the clean energy solutions and water and sanitation, therefore they are able to improve their livelihoods. Yeah.
So Faith, I know that FMO is undertaking a very specific initiative around IYBA. Maybe you can tell us more about the Nasira program.
Thank you, Faith. So as has been said before, we know that SMEs are the backbone of the economy, and for us, we realized the impact that COVID had on SMEs, and that is how Nasira was born. So together, in partnership with the European Commission, we came up with the Nasira program. Nasira is a risk-sharing facility that we offer to local banks to help them reduce the risk associated with lending to the marginalized groups. An example is women businesses, as has been said, the rural businesses, agri-businesses, and youth businesses, as well as migrants and refugees. So Nasira contributes towards narrowing of the financing gap faced by these groups by actually allowing the banks to venture more into these riskier markets, this riskier segment. And for the banks that we've deployed it to, we've actually heard from them about how much they've been able to grow their SME and MSME books. So the Nasira comes with a contract agreement that runs for about 6 to 7 years, and it also comes with technical assistance that is demand-driven to the bank or to the financial intermediary that we are deploying it to. And the technical assistance can also be deployed to the end client, that is the SMEs and MSMEs, to help them improve their operational efficiency, improve their business skills, to build their financial literacy. And it also comes with a portfolio monitoring tool that is enabled by a fintech. So the program was started in August 2020, and it came to an end in August 2024 with a total portfolio of about 500 million euros. And given the success that we've seen, we've been able to reach the target impact groups, and it's done quite well. So we are in discussions with the European Commission for an extension of the program. that will be referred to as Nazira Plus, and we expect this to be signed at the second half of 2025. Within the region, we've worked with a couple of financial institutions. So in Kenya, we have 3 partners. In Tanzania, we have in Rwanda and Ethiopia. And with the new program, we'll be able to partner with more financial institutions.
And Nishdip, AGF is very active in the intermediated space. We can speak about that as well.
Yes, so similar to Nazira, we provide de-risking instruments to banks, and I'm happy to say both the Equity Bank and KWFT are recipients of our guarantee. And basically our guarantee is in place to de-risk, to help banks to manage the risk or the perceived risk that may be around small and medium enterprises. When you look at young businesses, a lot of them tend to fall under the SME category, which is where we directly play. So we provide the risk-sharing instruments, but we also provide capacity development. For some sectors where we look at that have more challenges in accessing credit, which would be, I think, women-led and owned, youth, agribusiness, and green SMEs, we tend to provide more incentives in terms of discounts and pricing and a higher coverage of the risk as opposed to normal SMEs, in order to make sure that the banks are incentivized to use the guarantee. So far, we've been able to unlock financing over the 12 years we've been in operation of approximately $5 billion. So it's going very well. I'd say the guarantee is very well accepted by the market because we continue to have demand and from financial institutions, and we continue to raise capital and funds to be able to meet this demand.
Thank you for that. Let me start this with Benson. You lead an organization that primarily focuses on women. What is the eligibility criteria? What do these women need to do? What processes or requirements must they meet to be able to access this support from your organization?
Okay, thank you. I think for us, the primary criteria is that you should be economically active. That is, you should be doing some activity in one form or another that generates income. So, and if you look at our model, is basically majority of our clientele we recruit through the group methodology. And this is whereby we bring women together between from 10 to 15 members, women who meet and they know each other. Therefore, we organize them into groups and make sure that we are able to train them. We train them for a period of between 4 to 8 weeks, whereby they are able now to learn about financial discipline, how to keep books, and also how to manage meetings. And from there, we are able to finance them. We finance half the group members after the 4 to 8 weeks, and thereafter we finance the other half. And with this, they are able to first be able to start savings. Then from there, we are able to lend them, and they are able to repay the loans. And from here, then you find that the women are able to improve economically. So that is the main criteria that we look at. These women normally will find that most of them, they don't have any collateral. So the social collateral that we create is making sure that they know each other and they are able to save, and out of the savings that they do, we do a multiplier and we are able to lend them. And because they don't have collateral, then the social guarantee that they create is what we use as a means of making sure that they are able to use the money and repay the loans. The other criteria that, for individuals, the criteria we use is they should be able to provide collateral in one form or another. But most of our clients are basically in groups. Yeah.
Thank you, Benson. What about equity?
Thanks. I'll just anchor on a few of the items that Benson has spoken about. And to wear an academic hat, we'll say there's always rules of the 5 C's of credit. That makes it easier for me to then explain to the audience about what we look at. So the 5 anchors that we look at when you're looking at lending to the SMEs is, one is character, the second is their capacity to do the business, the third thing is the investment, which economists call it capital, the third piece is collateral, how much default is usually land security, can be able to look at, and the third piece is conditions. The conditions being the prevailing environment. Few months ago, we had the Gen Z story, and everybody will tell you, I can't open my shop because Gen Zs will be on the street. You can't then give somebody who's displaying their goods on the street money to do business because the prevailing condition at that time was not suitable. So that's one of the eligibility criteria that we look at. The second piece is capital. So most of the time when the bank is advancing you money, they'll tell you we'll give you 80% financing, we'll give you 70% financing, so that you contribute to the other 30% or 20%, because the feeling from the banks is when you've put something into that investment, the chances of you walking away is minimal. But if we give you 100%, you'll easily walk out of the door and into thin air. So that's why the banks then will look at you putting in something. Collateral will always be there in terms of traditional banking still thinks that you need to have some landed security, but thanking God for the likes of AGF that have brought in some de-risking mechanisms to solve for this. But the ultimate thing that we look at is character. And the Englishman says character is what you've been caught doing when nobody's watching. But now when it comes to business, then the bank is not there to watch what you're doing. So we'll then rely on the records that you keep, and how those records then are displayed to the bank is what the bank will determine to use for use of payment. So I'll then say character becomes the main criteria that we will use to qualify you for a credit facility or not.
Thank you. AGF works with both KFW and Equity. Do you impose a certain criteria on them, or how do you go about it?
So for SMEs, we adopt the definition that the bank uses, because we don't want to disrupt what they're doing. We want to enhance and encourage them to do more into that sector. So we usually, because when we look at the banks in Africa, their definitions may vary slightly in terms of maybe the tiering, but generally we take the definition of the bank just to make it as easy for them to continue and to adopt the guarantee and utilize it.
And Faith?
So for the Nazira guarantee, we do support MSMEs in any economic sector. The only condition that we give to the banks is that the credit facility that is covered by the guarantee has to be used for productive purposes, so we don't cover consumer loans. And as well, we do give the condition to the bank that at least 50% of the portfolio has to be on best effort basis, covering facilities that are focused on the target groups, that is youth, women, rural, agri, and migrant SMEs and MSMEs. Apart from that, we don't require the bank to come to us for approval before loading a credit facility onto the portfolio. We leave it to the bank. So the SMEs or the MSMEs have to go to the bank, and the bank does their own checks on whether they will lend to them.
Thank you. So financial institutions, which you all represent, have been accused of shying away or running away from supporting these startups. Maybe based on your experience, what have been some of the challenges that you face with working with this market segment, and why do you think you shy away from that? How do you face these challenges? How do you overcome them? Let me start with you, Collins.
Thanks. Banking decisions are, let me say, credit decisions are usually anchored on 2 items. I've talked about the 5 C's of credit, but let me unpack 2. One, on the matter of character. We use historical information to predict the future or whether we can give you the money or not. Some historical information may not be favorable, purely because the environment as at that time will not be suitable. So if I go back to use the example of the Gen Z, I think the 3 months of the Gen Z, sales were down for most businesses. But for the bank, the officer handling that application may not remember that during that window, the sales period was down. So that's one of the items that brings down our giving access to credit for SMEs. And the second piece is past environment of just that business. So we have a CRB mechanism in the country. But when you look at the CRB mechanism, it cuts out the borrowers who've not had a banking experience, because CRB is only anchored on people who've borrowed from financial institutions that are registered within the CRB. So once you're out of the CRB, then getting a credit score for you becomes a limitation. And the piece then that needs to be resolved is to see, one of the things that we've used is capacity building, just enlightening, giving the entrepreneurs an understanding of how do they capture their business records, so that when a bank official is reviewing them, they're able to be given favorable consideration for their request.
Thank you. Let me just understand from the MC. Do we have a few minutes? No? No? Okay. Oh, we went down. All right. I'm told we need to wind down, but I need to ask a very specific question with regard to a big elephant in the room. The issue of credit worthiness and credit riskiness. Can I ask Nishdip to touch on this? What is the real versus perceived risk, according to you, when it comes to these young businesses in this market segment?
Yeah, so not to take up too much time, but I think it was said as well in the earlier panel, it's more of a perceived risk. We know, and I'm sure even our colleagues from the banking sector will tell us that SMEs, young businesses, women businesses, they find it very difficult to have access to finance. So when they actually get that access, even if it is at a higher rate, they do their very best to make sure that they're able to honor it, so that they can keep coming back for more. So I think it's more of a perceived risk, and that's why we are there. The African Guarantee Fund is our ultimate, goal is that eventually the guarantee is not needed, because the SME sector is very well covered. Even the more riskier sectors within the SME segment. So I mean, in a short answer, it's definitely more higher perceived risk than the actual risk, and we see that more so on the sectors that have higher or more challenges in accessing finance. Thank you.
Thank you. And Benson, to you, what role can MDBs specifically play to support you further? Because what you do around women is very critical to what MDBs are focusing on, especially now with the SDGs and all. What can they do to support you more?
Yeah, what I would say is that we've seen especially partnerships, strategic partnerships with organizations like Africa Guarantee Funds coming in very strongly in terms of making sure that they are able to offer guarantee mechanisms. And on top of that, they also provide technical assistance, which extends beyond the institution, where you strengthen the institution processes. And beyond that, also, we are going towards making sure that we are catalyzing the market by educating the clientele outside there to be able to strengthen their businesses, and for them to be able to use the resources that we provide to them in a very efficient way to be able to grow businesses. Yeah.
All right, thank you for that. We will wind up now in the interest of time, but I would like to thank each and every one of you for your contributions. I want to just check if we have time for a question or two from the audience. We may, okay. Is there anyone with a burning question? Can I take a question? Yeah, okay. Yes, please. Stand up, introduce yourself, and just a quick question. And then let us know to whom it's addressed.
Good morning. My name is Maureen Amakabane from Nyayo Mamsokos, which is an ESO that supports women, MSME. My question is to Collins. Collins, you talked about seed capital that Equity distributes. I'm curious to know how that works and to whom do you target? Yeah.
Within the Equity Group Foundation, we have a capacity building mechanism. So those who go through the training and capacity building and are fit for funding and then given the seed capital for them to engage. So the first level is the training, and then once you reach certain levels of accepted training capacities, then you get the funding. I'll not be able to speak about the money at the moment.
All right. Asante sana to the panelists. A round of applause for them as they take their seats. Thank you very much. Thank you very much.
Thank you. Thank you. Thank you to our panelists. Thank you so much for sharing those very, very, very interesting ideas and insights. Another round of applause as they leave the stage. Those panel discussions, they've been really insightful, isn't it? So we really hope that the conversations that we've just had during these panel discussion sessions will continue. I hope we connect outside of this event as we continue to make the private sector thrive for the benefit of Kenyans. We mentioned that there would be an opportunity of questions, but unfortunately we've run out of time. However, at the end, if you have any burning questions, once we are done with the next session, you can reach out to any of us with your question, maybe on a note, or if there's time, you may have an opportunity to ask. So for now, we are ready to dive into the next agenda item of the day. This is the crown of the event today. So for this session, we are going to showcase a tangible way in which the Team Europe initiative is supporting businesses in Kenya. And today, the European Investment Bank is signing its largest ever financing support to SMEs through its intermediated lending framework in partnership with the Kenya Commercial Bank, and also supported by the European Union and the Gates Foundation. To kick us off, we are ready on stage. To kick us off, I would like to call upon the following distinguished guests to join me on stage. The first one is the host of this event, the European Investment Bank Vice President, Thomas Ostros. Please join me on stage. A round of applause. Now down. Next on stage is the KCB Bank Group CEO, Paul Russo. Please join us on stage. Their signs, yeah. Next is the European Union Ambassador to Kenya, Her Excellency Henriette Geiger. Please welcome to the stage. And last but not least, we have the honor of having the presence of the Cabinet Secretary, Ministry of Trade, Investment and Industry, Honorable Salim Vuria. Karibu Waziri. Thank you. Thank you very much all. I think you can take your seats now. So we are going to have a few remarks from our distinguished guests on stage. And first, I will call upon our Vice President, of the European Investment Bank, Thomas Ostros, to give his remarks. Welcome to the podium.
Thank you so much, Honorable Minister, Her Excellency Ambassador, the CEO of KCB Group, Team Europe members, ladies and gentlemen. It's an honor to be here today. This event is important because we are going to sign an agreement that will support Kenya's businesses by injecting much needed capital, thanks to our great partnership with Kenya Commercial Bank. We have spent earlier part of this morning talking about how to better support investments towards young businesses in Africa, with a particular focus on enhancing the access to capital for women entrepreneurs. This is very important for me personally, for the bank, but also for the European Union to create those partnerships to support women-led or owned businesses. Part of the challenge is capacity building and technical support to avail bankable businesses that are ready for financing. However, another bigger challenge is financing for those that do not yet meet the criteria. Supporting business investment is a key priority of the EIB, as reinforced by the European Union Finance Minister earlier this year. EIB's partnership with Kenyan financial institutions, venture capitalists, and private equity partners to deploy capital to businesses is an effective way to support the local economy. I'm honored to be here today to formally sign this investment partnership with KCB Bank that will mobilize a combined 230 million euro worth of financing. In 2023, the largest share of the European Investment Bank's funding went to supporting the private sector, with credit lines to leading local financial institutions. The EIB invested over 3.2 billion euros in Africa, and of that amount, 1.1 billion euros was dedicated to support private sector to create economic growth and supply skilled and sustainable jobs. Micro-enterprises, small businesses, and mid-caps are a key part of the global economy, and Kenya is, of course, no different. There are many businesses with fresh ideas, compelling new products or services, and high growth potential. I've visited several exciting small and medium-sized businesses in Nairobi and outside, and I've been very impressed by the entrepreneurial spirit that you can find here. But like most places in the world, small and medium-sized businesses have difficulties in accessing financing. Tackling Kenya's economic and development needs require a multi-pronged approach involving different key partners, such as the national government, development institutions, business community, and the public. One way we do this is through intermediated lending framework that is based on partnership with a wide network of commercial banks, microfinance institutions, venture capital and private equity funds, angel investors, and other providers that can act as a link to the business. The framework under which we provide funds to local banks, such as the Kenya Commercial Bank for on-lending, is helping commercial banks to continue to provide capital to underserved private sectors, for example, startups and youth or women-led businesses. On this, allow me to speak a little bit more on gender investing, a topic very dear to the EIB. Recent studies at the EIB shows that globally, companies founded by women receive less than half as much funding as those funded by men, but deliver twice as much revenue per dollar invested. Gender-balanced leadership teams in private equity generate a 20% higher net return, yet only 15% of senior investment teams are gender-balanced. Women entrepreneurs are more likely to start sustainably focused businesses. Companies with gender-diverse boards have 40 to 60% lower energy consumption, greenhouse gas emissions, and water use. Eastern Africa has a 73 female labor force participation, the highest on the continent, yet make only 61 to 89 cents for every dollar that men make. In Kenya, 48% of firms have female participation in ownership, and women are well represented in leadership positions. However, recent studies by the financial sector Deepening Kenya shows that men borrowed 2.4 times more than women, despite them having a better repayment history. So apart from funding or capital, the EIB also provides technical assistance and advisory services. This helps the local banks and end beneficiaries to be able to create resilient enterprises that can grow long term. In the case of Kenya Commercial Bank, the technical assistance for the facility we sign here today is provided through the Gates Foundation, a partner that we work with in many, many cases, which has entered in a new partnership with the EIB on this topic. Both institutions aim to support access to affordable financing for women entrepreneurs. The EIB has provided nearly 800 million euros of investment support to Kenyan business up to this date. Our partnership with KCB Kenya is new. However, our partnership with the KCB Group through its other subsidiaries in the region stretches back years. These include KCB Tanzania, that we have partnered with a few times, and KCB Rwanda. I actually did a revisit to Tanzania after we closed the deal with KCB Tanzania and other commercial banks in Tanzania to actually visit the small and medium-sized enterprises that have received the funding. And that was, I think, a very interesting period of visiting. Women-led entrepreneurs that got a little bit more funding, able to invest, expand their firm, get better revenue, and treat their employers with also higher wages, hopefully, in the longer run. The current investment partnership that we sign here today for a combined total of 230 million euros from two institutions represents the largest ever European Investment Bank support for private sector investment in Kenya. This investment will go into supporting small and medium-sized businesses with a focus on women-led or owned businesses, youth entrepreneurs, and those in key sectors such as agriculture. Through KCB Bank's female-led and made enterprises and a KCB Foundation propositions that they have designed flexible, accessible, and affordable solutions for women entrepreneurs, both financial and non-financial, which I think is very impressive. This serves as a comprehensive platform to support women and young people on their entrepreneurial journey, addressing gaps left by traditional lenders. This substantial impact underscores the commitment of KCB Bank and its partners to promote gender equality and economic empowerment. We also go into a deeper cooperation on greening the financial sector. The European Investment Bank is the climate bank of the European Union, and we are always happy to partner up with banks, commercial banks, that has ambition and drive to green and finance green investments to improve the country's development and economic prospects. So let me conclude by extend my heartfelt thanks to the European Union Ambassador. You are a steadfast partner in our business in Kenya, and we appreciate that very much. And your team, of course, as well as the government of Kenya. We are proud to have you here today, Minister, and we are very glad that we have the opportunity to interact with the government during my visit here today. We will continue to work closely with private and public sector in Kenya to finance interesting, future-oriented investments. Thank you very much.
Thank you. Thank you so much, Vice President Ostros. Next on stage, I call upon KCB CEO, Bank Group, Paul Russo, to give his remarks.
Honorable Salim Vuria, the CSO, Ministry of Trade and Investment, Your Excellency Henriette Gregor, the European Union Ambassador to Kenya, Thomas Ostros, Vice President, European Investment Bank, members of the Diplomatic Corps, distinguished guests. I see one of our board members in the room. I don't know whether he's disappeared, Duncan Onyango, who is a board member of KCB Investment Bank. My colleagues, I've seen 3 senior colleagues in the room, Tony Muliza, who is our group treasurer. I've seen Mendi Njonjo, who is our MD for the foundation. And we have David Kitheka, who leads strategy and investor relations in the room. Thank you, David. And actually, David dealt with getting us here. So thank you, David. I might be reading the speech, but you did the hard work. I truly appreciate David. Thank you, thank you. Ladies and gentlemen, good morning. It's a pleasure to join you this morning as we witness the signing of a partnership between KCB Bank Kenya and the European Investment Bank, which will allow young people, women and SMEs an opportunity to thrive by availing the necessary tools and financial support. Overall, as KCB, we are deliberately setting over 230 million euros, which is 32 billion, to support small and medium enterprises, youth and women in Kenya. As the Vice President of EIB mentioned, this is the first time we are actually getting into this arrangement in Kenya. But truly, in Rwanda, we're in the 4th circle. In Tanzania, we're in the 2nd circle. So we are not new to each other. We've had success stories, and thank you, EIB, for your support in those markets. And I'm actually thrilled that the big brother has finally come to the table. Once KCB Kenya is on the table, Nicholas, thank you for the work you've done. Everything else will be knocking door for Uganda and the rest. For the 128 years that KCB has existed, KCB Group has been a catalyst for development, enabling growth and economic progress, sustainable regional trade, and connecting millions of people across the world to the opportunities that the Africa continent presents, beyond making social impact in the communities. Sometimes, CS, people just see KCB. It's been there for 120 years, 128 to be precise. Operating in 7 countries. If there's any entity that can be a catalyst for progress, I'm sure we'll be on the table in whichever of those markets. As KCB, we're leveraging our heritage and experience across the markets to deepen financial inclusion, with a specific focus on supporting young people and entrepreneurs to make meaningful contribution in economic expansion. But even most importantly, to just address the unemployment issue. And over and above that, is just to bring dignity in their lives. We believe in tapping the combination of people, partnerships, and technology to drive this transformation. In the dynamic landscape of African entrepreneurship, and you can see I'm shifting just from talking about Kenya, MSMEs will continue to play a pivotal role. It's therefore gratifying that we have partners like EIB through the Investing in Young Business in Africa initiative, buttressing our efforts to build a strong and vibrant SME sector to provide a strong foundation for our communities. As CS, we have a product, a value proposition for women that is called FLAME. It's female-led and made enterprises. And if I'm not wrong, in the last 2+ years, we've lent 160 billion to that group. Just businesses that are led or are made by women. The NPL is 2%. 2. So if you're sitting next to a man, please just tell them to behave when they borrow. Because if they behaved, we could lend more. But again, and we're discussing before we came here, it's just because of the roles placed on the women and how they carry many of us, including those of us who are lucky to have married. A number of instances we don't confess that we are carried. They have a bigger responsibility to pay back and to sustain. So for that reason, when we say KCB is going to lend more to women, it's coming from experience. For the Tanzania, it's $20 million, the last one that you got. 100% of that facility went to women. 100%. Which means EIB, we should be coming. Nicholas, have you done a paper for the next one? So I'm just lightening up the session to say, if we have to bridge the gap, if we have to make significant progress going forward, we must create stronger partnerships. And I want to say to EIB, KCB will remain a strong partner in this region. This deal that we are signing today for EIB presents an opportunity for us, the financial industry, in a way, as I said earlier on, to create a lasting impact, but most importantly, leverage on our experience. I think it would be unfair for me to leave this podium without saying, KCB Group has some of the best resources and staff for particularly small and micro enterprises support. I know we are known for corporate banking. That's not in question. But the work that we've done with Mendy and our team on the foundation, and the work that we've done with Anastasia on the women, is testament of the capability of the people. I believe that the organizations of future must stand on 3 pillars: pillar on people, pillar on technology, and a pillar of partnerships. We've ticked the box on the pillar on people. We've invested in technology significantly. I'm proud to stand here today on the pillar of partnerships. And I thank you. So I look forward to standing here next time to sign another one, but to tell the success stories and the transformation that the teams will have made. I thank you.
Thank you. Thank you, CEO Paul. I want to acknowledge that the EU ambassador to Kenya had already given her opening remarks in the morning. So I'm aware that you are not giving any at this stage. But, okay, but welcome to say something if you are.
Thank you very much. I will not bore you by repeating what I said this morning, but maybe just 3 remarks. First, the EU and Kenya signed an economic partnership agreement. So this is guaranteeing duty-free, quota-free access to the largest and most prosperous consumer market in the world. Together with Minister for Trade and Investment, we're making a lot of effort to make the advantages of this agreement work for all Kenyans, especially for SMEs and women and youth. And we haven't talked about youth in this session, and I just wanted to say that given that almost 1 million of young Kenyans enter the job market every year without a hope to have a formal employment, this has to happen. Job creation through business creation. So we are doing a rollout, basically a traveling journey in the whole country to make sure that everybody in Kenya knows what this economic partnership agreement is and how to take advantage of it, also by helping to build value chain in the most promising sectors. The other thing I just wanted to mention is that the countries that are successful in economic terms are the ones where the government and the private sector work hand in hand. And I think this is very much the success recipe for Kenya as well. The government has to create the enabling environment for business and investment to thrive, and then get out of the way to let business do what it does best, business and investment. And I've seen this so many times across the world, including with the Asian tigers, where I worked for several years. So I'm sure that Kenya can do it because I've seen the strength of its private sector. The last remark is creative industries. I think this is one of the sectors that have had the strongest economic growth in Kenya. But of course, this is a sector where it's difficult to raise capital. And it's very important not to overlook that sector, because the future of world economy is in the creative sector. So the sooner Kenya can develop that and support it, the better. And we are opening today an EU-Kenya Film Festival. We have been in the space to create opportunities for the creative sector, and we hope that also with the SME loans and technical assistance, we can make inroads in a very difficult sector to access capital. And I will conclude just to give some remarks for the CS trade, because I know in his former docket, we worked very closely on blue economy, and this is close to his heart still. Blue economy is a very much underrated sector, not only in Kenya, but globally and all over Africa. So we know that with the right enabling environment, the GDP contribution of the blue economy can be ×4. So Kenya needs to grow to provide jobs and for all these young people, and the blue economy is there to provide that opportunity. Again, we have to create the right environment for it to thrive. The EU stands with all of you. We are looking for opportunities where we can have most impact. That's where we want to throw our weight behind. And so I'm very happy that we're here today, and the future is yours. Asanteni sana.
Asante, asante sana, Your Excellency. And now for the keynote speech, I call upon the Cabinet Secretary, Ministry of Trade, Investment and Industry, Honorable Salim Mvurya. Karibu Waziri.
Thank you very much, Your Excellency Henriette Gega, the EU Ambassador to Kenya, Mr. Thomas Ostros, the EU Investment Bank Vice President, Paul Russo, the KCB Group CEO, the micro, small, and medium enterprises representatives here today, the private sector, senior government officials, ladies and gentlemen, good morning. I am deeply honored to participate in this distinguished gathering, and let me take this opportunity on behalf of the government of Kenya to express my gratitude for being part of this signing ceremony for 230 million euros in credit line for financing micro, small, and medium enterprises in Kenya, and extend my appreciation to the European Union for the continued support. The European Investment Bank, the current chair of Investing in Young Businesses in Africa initiative, is dedicated to supporting early-stage businesses, young entrepreneurs, and women across Africa to foster sustainable, inclusive business growth and create jobs. In Kenya today, the micro, small, and medium enterprises play a vital role in Kenya's economy. They contribute approximately 33% to Kenya's GDP and employ more than 80% of the total workforce, especially in the informal sector. They therefore play a very critical role in absorbing and increasing labor force, especially women and youth. micro, small, and medium enterprises promote innovation in the form of customized products and services that meet local market needs. They are first-order agents of entrepreneurship, allowing innovative businesses, models, and increasing competition in many sectors. They contribute to poverty alleviation and reduction in economic inequality, especially by providing livelihoods to marginalized communities. The micro, small, and medium enterprises often act as ancillary suppliers and distributors for larger enterprises, hence establishing significant value chain linkages that are useful for both small and large enterprises. This linkage to large enterprises strengthens the local value chains and empowers the economy. And therefore, micro, small, and medium enterprise support the cause of local economies by retaining their wealth within communities. They create demands for locally produced goods and services, hence encouraging local economic development. Ladies and gentlemen, it is worth noting that my ministry has developed an industrial subcontracting strategy which will support subcontracting for micro, small, and medium enterprises to participate effectively in manufacturing. The overall objective of the strategy is to stimulate sustainable industrial growth in Kenya through subcontracting. Subcontracting will not only create jobs and enhance market access to the micro, small, and medium enterprises, but also allow transfer of technology, improved quality for products, and generally capacity building to the micro, small, and medium enterprises. Investing in young businesses in Africa initiative supports the growth of young entrepreneurs and startups in Africa by providing access to finance, mentorship, and technical assistance. It plays a key role in helping these businesses scale and succeed. In Kenya, where 80% of the population is under 35, young entrepreneurs are a driving force of innovation, especially in sectors like technology, agriculture, healthcare, and renewable energy. This program is therefore crucial for empowering Africa's growing youth population and fostering long-term economic development. Equally, women play a significant role in driving the Kenyan economy. Their businesses account for approximately 80%. Approximately 48% of micro, small, medium enterprises, contributing around 20% of Kenya's GDP. Women dominate informal cross-border trade, typically dealing in such goods as agricultural produce, textiles, household items, and other essential commodities. Their contributions are vital for economic survival in border communities and often form the primary source of income for families. The government of Kenya has been very instrumental in securing access to new markets. The European Union, where we have signed the Economic Partnership Agreement, and it is now running at implementation, is a new market where Kenyan products can access 27 countries. We also have been able to open markets in Africa through the AFCFTA, where now we have a new market in Africa that has a 1.2 billion population. Within East Africa, we have a market with around 300 million people, and we are also in discussion with the US so that we can strengthen our strategic investment partnership and also see how we transit the AGOA, which has been existing. All this opening up of markets means that we need now to prepare the micro and small enterprises to enter these markets, because we have entered into agreements so that we can have duty-free and quota-free access, especially to EU member countries. So, ladies and gentlemen, this signing here today and the support to the micro and small medium enterprises is a very key initiative, because as an investment ministry, one of the challenges that we have seen is that we have low capital uptake, and sometimes it is very absent in the micro, small, and medium enterprises. And the agreements being signed here today, and especially with our own KCB, will be able to cover the gap. And that is an initiative that as government, as a ministry, we will continue to support. His Excellency the President has been very clear on how we roll out investment initiatives, and that is why we have been able to initiate special economic zones, export processing zones across the country, as well as rural industrialization through the county aggregation and industrial parks. All these initiatives require that we also prepare backward linkages, where we prepare certain value chains that are going to be very useful in entering the market. And in all these initiatives, the challenge has been financing. I'm happy today that the European Investment Bank and KCB is putting pen and paper, and this is going to be very useful to drive the economy of our country. We have equally other initiatives within the ministry. We are de-risking investments through the Kenya Development Corporation, where also funding of initiatives happens. We also have other initiatives to ensure that we create an enabling environment through the warehouse receipting system, especially for agricultural value chains, and also the Kenya National Multi-Commodities Exchange, which is geared to provide an environment to ensure that we support these initiatives. And therefore, my presence here today, ladies and gentlemen, is testimony, and for the testimony to the government of Kenya's commitment to ensure that we support inspiration of businesses across the country. At this stage, we are also providing leadership to key reforms, because when you engage the private sector, there are a number of issues that are challenging their enterprises, and we have already initiated reforms through public participation, and we'll be engaging more, because we are coming up with a business amendment bill that is going to be very crucial in leveraging and leveling the playground for businesses in our country. I also want to assure the Vice President of EIB and also the EU Ambassador and everybody in this room that Kenya is the champion for green industries. We actually have an African Green Industries Initiative, which is led by His Excellency the President and key partners, including the EU, so that within that process we are able to map out key businesses that are focusing more on greening, and we also give them incentives so that they can thrive. So, ladies and gentlemen, I'm very pleased to be here, and I want to assure you that moving forward, we will also do sensitization together with KCB and other partners to ensure that the funds we are signing here, there's knowledge across the country and people can know how to access these investment funds, so that within a very short time, the group CEO can declare that the port has been fully utilized, and we see how we can negotiate for more. So right now we have a process which is going on across the country. We have a schedule, because we realize that there are many agreements that have been signed, but Kenyans are not aware. So for the economic partnership agreement with the EU, we have a schedule that is already out. We are moving to all the counties. We started here in Nairobi. We went to Nakuru, and now we are moving to the different parts of the country to ensure that Kenyans are aware of the advantages that we have signed in the APA, and we encourage them to take advantage of the quota-free and duty-free markets that are being opened so that we can have our products out there. One of the areas that has been very critical in opening up the access to markets is the issue of standards and quality of Kenya products. And for that, I want to assure you that as a ministry, we want to provide leadership to ensure that we facilitate backward linkages that are going to prepare the key value chains. The standards should begin from the source. For example, if we are talking about tomato value chains, then we need to discuss with the farmers at seed preparation at the farming level so that our products can be accepted globally. So I want to say that I'm happy today that we are signing this funding, and it is going to be useful. So I urge Kenyans, especially those in the micro and small enterprises, to take up this opportunity. And you can already see this is focusing on youth and women. Vice President, the youth population in Kenya is very vibrant. They have properly gone to school. They are innovators. And I'm sure this funding will be very critical to assist them in initiating various economic programs that will also inspire their livelihoods, but also open opportunities for job creation. On matters women empowerment, I think this is very crucial, and I'm sure the women in the room will agree with me that this fund, there will be a very little time. You will have already exhausted the allocation in the next few months, because I know our women in Kenya are very vibrant. They also control the rural economy, not just in agriculture, but also in a number of initiatives in business. And as government, we will move forward to ensure that we provide the necessary support, the necessary enabling environment for these businesses to thrive. With those many remarks, I want to thank you, and I want to thank the EU for this bilateral cooperation. It is very useful, and it is opening up markets for our country. Thank you very much. Maybe before I leave, I want to recognize the PS in charge of trade, Dr. Alfred Kombudo, who has joined us. He's been very instrumental in the out-of-country negotiations with the US, with the EU, and now we've concluded another comprehensive economic negotiation with the UAE, and we are moving on. Karibu sana, Dr. Kombudo. Thank you very much, ladies and gentlemen. Thank you.
The European Investment Bank, which is the EU bank, in partnership with the Cooperative Bank, is supporting SMEs in Kenya to access.
Very insightful remarks, Waziri. With those conclusion of remarks, we shall now move to the climax of the event, which is signing the finance agreement. I'm going to ask the two principals, EIB Vice President and KCB Group CEO, to proceed with signing. You have the folders right in front of you. Please proceed. Next, I shall now ask the witnesses to this signature, the EU Ambassador, Her Excellency Henrietta Gega, and Honorable Salim Mvurya, representing the Government of Kenya. Please proceed with the signatures. A round of applause. It's signed, sealed, and delivered. Wonderful. Yeah, we have to make sure everything, all the pages are signed, nothing is left blank. It's really cool, yeah. So we have 4 copies in total. Amazing, amazing. So we crown this session with a photo. Let's showcase the signatures first, the first photo. Wonderful, wonderful. Once that is done, we are going to exchange the documents. Photo as we exchange the documents. And also a handshake, especially with the, yes, wonderful. Great, amazing. We are going to have another photo with a joint handshake. We call it a snake chain. Like this. Like this, we hold each other like this. Yes. Are we good? Thank you, thank you. We may be seated. Thank you, thank you. Let's be seated. And now I give this opportunity to the media. What questions do you have for our distinguished guests? 3 to 4 questions max. Who wants to go first? Anyone from the media with a question to our distinguished guests? This one, yeah.
Okay, my name is Maximila Fuller, I write for the County Diary News. Today is as we're celebrating the signing the finance agreement. My question goes to the the CS, Vuria for Trade. From your speech, you've really said that we have many agreements being signed in the Kenya government. But the problem of the many agreements, like Kenyans are not aware of the agreements. Which criteria, as the CS for Trade, are you going to use to ensure that each and every Kenyan benefit from this finance agreement? Thank you so much.
I think we take another question before we respond, or any other question? Okay, all right, please. Yeah.
Thank you very much for the question. First of all, as I said earlier, I want to register my appreciation on behalf of the government of Kenya for this occasion today, where KCB has signed together with the European Investment Bank. And I'm aware that the Kenya government has also worked on other economic partnership initiatives with other countries, and more particularly now the EU, where we signed the Economic Partnership Agreement to open access to markets. The initiative to ensure that Kenyans are aware is that we have developed a program for sensitization, which we are doing across the country, to ensure that we capture each and every entrepreneur. And we started this with the private sector here in Nairobi. We have met the Kenya Association of Manufacturers, the KEPSA, and many others. And equally on this funding that has been signed here today of 230 million euros, there will be a requirement to make sure that we sensitize the public so that they can know there's an opportunity for funding their enterprises, especially the youth and women. This sensitization will take several forms. It could be physical meetings. It could also be through the different forms of media. But I want to assure Kenyans that this is not going to remain in the boardroom. It will go out there so that the people that are targeted can benefit and they can know the procedure for doing this. On access to markets in the various countries where we have done many bilaterals, we expect that Kenyan products now can enter those markets, and equally that will be part of the program to ensure that we now educate Kenyans on the existing opportunities in Africa, but also in the rest of the world. So that is the assurance I want to make, and we will work with the media to ensure that this information reaches the target population. Thank you.
Yes, thank you. Thank you very much, Waziri, for that response. Any other question at this stage from the media? Going once, going twice, gone. Okay, so I will ask our chief guests to kindly take your seats. Wonderful, wonderful. Okay, so this marks the end of this ceremony. Hasn't it been lively, rewarding? We sincerely do hope that your expectations were met. And for those who did not have an opportunity to ask questions during the panel discussions, that door is still open, not at this moment, but you can send your questions. We are going to, I can point one of my colleagues to you. Where is Harriet? Harriet? Yes, my colleague Harriet, if you have any pending questions, please see Harriet, your contact, and we will be able to write to you or even a call because time is not on our side. So with that, I would like to sincerely thank everyone who took out their time to be with us here today. In Kenya, we say, is the mic working? Yes. In Kenya, we say mambo ni mengi, lakini muda ni mchache. That means there is a lot to do and discuss, but time is limited. So from us, it's not a goodbye, but I see you later. We hope to have future sessions on the IYBA initiative. And for the next time, we look forward to companies that have benefited or are going to benefit from this initiative that has been signed today, taking the center stage and being presented as examples of transformational impact possible. So have a great afternoon. And to our online participants, our online audience, thank you so much for staying with us all through. Please continue the conversation with the hashtags that are displayed on the screen. Asante sana.
The European Investment Bank, which is the EU bank, in partnership with the Cooperative Bank, is supporting SMEs in Kenya to access the finances they need to weather shocks.
Nilianza hii kazi 2002 nikiwa mkulima mdogo, nilikuwa naweka ng'ombe moja. Nilikuwa na shida kubwa sana ya kuendea dairy mill industry area. So nilikuwa natembea Donholm mpaka idasaidia miguu, ndio nikatafute na nitafute mtu wa kunisaidia na baiskeli. Nikafikiria kama watu tuko wengi hivyo tunapatanaga idasiri na baiskeli, sinifungue kaduka Kayole, na nikafungua. So watu wauga wakataka kujua huyu mtu anauza kakiwa Kayole ni nani, wakakuja wakatembea. Kawaambia basi simnifanye nikuwe distributor. Masharti zile zilikuwa kubwa sana, sababu I had to have 3 trucks and a bank guarantee of a million. Nikaenda kwa bank, wakaniambia kama ni bank guarantee watanipatia, and we started business. Loan ile nimepata kutoka Cooperative Bank imenisaidia sana wakati wa COVID. Actually hapo ndio nilinikia, sababu every other business ilifungwa, tuseme shule zilifungwa, hizo maclasses wakaeka kuku, wacha tuuze chakula ya kuku. Na ujue COVID ilikuwa uingie nyumba ukule, so watu walikuwa wanatuitisha kuku zile zimewekwa na watu. Sisi wakati wa COVID hiyo pesa ilitusaidia sana.